Hello, everyone, and welcome to our latest ALTA Insights webinar. For those of you who don't know me, I'm Diane Tom. I'm the ALTA's Chief Executive Officer, and today we've got a great presentation lined up. And we're looking forward to getting everybody up to speed on the latest regarding the risks to the unregulated title insurance alternatives that have been proposed by Fannie Mae and Freddie Mac. And what we're going to talk about today is the impact that these products could have on your business and discuss it from ALTA's perspective. Before we get started, I have a few housekeeping items. For those of you who are just participating for the first time, these webinars are being recorded. You'll get an email with a link to the recording and a copy of the presentation tomorrow. And you can always access all of our webinars at alta.org/webinars. You can also download a PDF of the presentation from the handouts section in the Go to Webinar window. Also, throughout today's presentation, if you have a question, please submit them through the questions box. And our expert, Jeremy Yowie, will make sure that they're being addressed. And last but not least, we'll hold some time for Q&A at the end of the presentation. Now, I'd like to take a moment to recognize Qualia as our sponsor for today's webinar. And here's a short message from Qualia.
Qualia's digital closing platform is used by thousands of real estate, title, escrow, and mortgage professionals to provide simple, secure buying, selling, and refinance experiences. Whether you're running a closing for a purchase or a refinance, remote or in person, enjoy an easy and consistent process from order opening to post-closing. Qualia innovates alongside you. Together, we can proudly transform and simplify how homes are bought and sold.
Thank you, Qualia, for your support and for that message. Now, it is my great pleasure to introduce to you today our speakers. First up, Chris Morton. Chris is our Chief Advocacy Officer and also ALTA's Senior Vice President of Public Affairs. Along with him on today's panel is Steve Gottheim. Steve is our General Counsel here at ALTA, and Emily Tryon, who is ALTA's Vice President of Government Affairs. We have the top team here who has been working very, very hard and diligently on this issue for over a year now. And the information we're going to share with you today is really critical because honestly, you know, for the past year, we have been doing our best to address this challenge. And if this isn't the most significant thing that has hit our industry, it's one of the most significant existential threats to our industry. And I'm really excited that we have our team today to talk about what the impact this could have on your business. So with that, I'd like to hand it off to Chris to get us started today. Chris, take it away.
Great. Well, thanks, Diane, and it's great to be with everybody today. Before we get started and talk a little bit about our agenda, one thing I did want to mention for those who may be media on this call, this call is closed to the press. It's for title professionals only. So if there are folks who are with the media, they could jump off. If they want to talk to us at ALTA, please get in touch with Jeremy Yowie or Megan Hernandez, and we'd be happy to speak with you. So with that taken care of, I want to just touch on the agenda today. As Diane said, you know, what we really want to do is provide some background and history for all of you to make sure you understand sort of why are we talking about these issues and why are things like title insurance alternatives even being discussed and considered as it relates to the government-sponsored enterprises, Fannie Mae and Freddie Mac, and their regulator, the Federal Housing Finance Agency. From there, we'll talk a little bit about what this really means from a business perspective. We'll have Steve walk through some of that, and then Emily will sort of allow us to talk a little bit about the leadership that the team here has provided in collaboration with all of you in really elevating this set of issues to policymakers at the federal level as well as around the country, and what we're doing about it to really tackle the challenge as we see it. And then finally, really it's a question of what can you do? I think the engagement of ALTA members and title industry professionals on this issue thus far has really been pivotal to the success as we've achieved it in the discussions that we've had and raising the awareness with policymakers. So we want to touch on that as we close, and of course get to your questions and answers. So with that, let's talk a little bit about the background. And I think it's important to have a little bit of history, as I said, as to how we got to this place. So if we go back a little over a year ago to April of 2022, many of you will recall that at that time, there was a change that was made to Fannie Mae's selling guidance that for the first time, at least with respect to Fannie Mae and the loans that Fannie Mae purchases, they allowed for the use of attorney opinion letters in limited circumstances, and they made some guidance changes to effectuate that. At the time when that occurred, some of the conversations that we had directly with Fannie Mae was really that this was more of a conforming change to their guide to standardize it with changes that were made going back to 2008 to Freddie Mac's guide to do the same thing. Now, having said that, there were some developments to come following that really indicated the broader initiative that was at play, and I'll talk about that in a second. But interestingly, once that guide change was made on April 6th of 2022, and coincidentally, there was one provider in the marketplace of a new form of attorney opinion letters that announced the day after, on April 7th, that they had developed a product that conformed to the Fannie Mae guidance and was available across the country in all markets. That company, Boxster, I know many of you have heard of and seen some of the marketing materials. We'll talk a little bit more about the particulars of that, but that announcement came the day after. Again, interesting development and timing on that. Following that, though, we really learned more about where this all really stemmed from when both GSEs, Fannie Mae and Freddie Mac, in June of 2022, last year, announced what they termed equitable housing finance plans. And these were really broad scale efforts to address what we all believe and support, which is the need to promote additional opportunities to expand housing and home ownership, particularly for underserved communities and low and moderate income and minority borrowers. And so as part of those plans, there was a component piece within them that dealt with ways to lower closing costs, and in particular within that bucket, title and settlement costs. And so that's how this all comes together, and I'll talk a little bit about that initiative more in a moment. Moving from June, we had a second major provider that October last year, United Wholesale Mortgage, that announced a similar attorney opinion letter product. Now, interestingly, there's distinctions between the product announced in April by the company Boxster and United Wholesale Mortgage, and that one is got an insurance wrapper and another does not. And so we can speak more specifically about that as we get into the business and the impacts on the business. From October of 2022, then we had another iteration that sort of upended a lot of this discussion when there was a report in February of this year that Fannie Mae not only had made the guide changes I talked about in April of the prior year, but was considering another pilot initiative that would in its entirety waive their requirements for title insurance on the lender side for loans, a certain amount of loans that they would purchase, and they would essentially be taking on that risk themselves, the so-called title waiver pilot. And again, we'll talk more about that. So as you can see, a number of things and developments have occurred over the last year plus that have generated a lot of this conversation, both in the marketplace and, as we'll talk about, amongst policymakers, both at the state and federal level, which includes in May of 2023, given all of the active engagement of the ALTA membership in the title industry.
Hey, Chris, I don't know if you can hear me. I can't hear you all of a sudden.
GSEs and their focus as it relates to the equitable housing finance plan. So if we could move forward into the next slide. So this is a statement from FHFA in the announcement of these equitable housing finance plans, back again in June of last year. The quote being that it really represented a commitment to sustainable approaches that will meaningfully address racial and ethnic disparities in home ownership and wealth that have persisted for generations. And again, I'll make the clear point, and I think one that can't be said strongly enough, that ALTA has been a leader on a number of fronts relative to consumer protection policy initiatives, opportunities to promote broader home ownership among low and moderate income and affordable borrowers. And so we wholeheartedly embrace the effort to do that. I think the question for all of us is how to do it where you're protecting consumers, you are providing for the best, most comprehensive product and coverage, which we know and believe very strongly is title insurance, and you are working collaboratively with the experts that are regulated in all 50 states that know every day how to deal with doing the public record search, providing for the claims process, and doing all the things that this industry has done for over 100 years. So we believe from a partnership perspective, we need to continue to collaborate with FHFA and the GSEs rather than move into a posture where we're throwing untested alternatives that are unregulated or not fully considered into the marketplace. So let's talk about the gaps that exist. It's important to recognize again that there is a real problem here and a real challenge that we all play a role in addressing. This shows from census data, the trajectory over the past 60 years of the home ownership gap. And it really has, essentially remained relatively static with some, ticks up and down here and there. But clearly today, there is a 40 percentage point gap between the white home ownership rate and the black home ownership rate, and a little bit less from the white Hispanic gap, and even a little bit less than that from a white Asian and Pacific Islander perspective. So these are real challenges, ones that we acknowledge. We're working on a whole host of issues, as I mentioned, from a policy perspective, whether it's things like heirs property or addressing vestiges of racial discrimination with issues of discriminatory covenants, and also from a consumer protection perspective, attacking predatory practices in the marketplace like end traps that we've led from a model legislation perspective, which now I think 15 states have adopted, and we're working to do more there in the states and also with attorneys general nationwide. So there's no question, from an ALTA perspective, policy-wise, we're working on those issues, but we also have to work on it from a program and a product perspective. And I know that a lot of our members certainly are working to work with first-time homebuyer programs and down payment assistance programs with housing finance agencies, as well as initiatives around Community Reinvestment Act programs. So that will continue. Let's move to the next slide and then show a little bit more in terms of where varying players in the marketplace stand as it relates to this chart, which is sort of the purchase loan market and the shares by channel of certain purchases, broken out by racial and ethnic demographics. So as we can see, the GSEs, and this is really the point behind some of the initiative with the equitable housing finance plans, really follow behind FHA and VA in particular as it relates to purchase loans for, particularly Black and Hispanic borrowers. And so a lot of the impetus behind what the GSEs are doing is really looking at the data in this particular breakout and recognizing that they have work to do amongst some of the other participants in the marketplace to move into a position where they're doing more for affordable borrowers and low and moderate income and minority populations. So with all that being said, what I think we want to do now is talk a little bit more about really what this means from a business perspective, talk a little bit more about the products in the marketplace and some of the data that we've presented, to make our case from both a policymaker perspective as well as a lender perspective. So with that, I'm going to turn to Steve to take it from here over the next several slides before we talk about this Fannie pilot and walk us through some of that set of the discussion. So Steve, take it away.
Thank you. So, as Chris just walked us through kind of the why is this happening now? What is driving the conversation at the Fannie and Freddie level to even consider these alternatives? I think it's important for us now to pivot and start to talk about the what. What are these alternatives? What are they really trying to do? And how will they interact with the way you all do business in the years coming forward, or maybe in the years coming forward? I think the first part of this is, hopefully this slide here is not new to anybody. It's a simplified graphic showcasing the entirety of life cycle of a title order, right? From opening it all the way through recording it and sending the final docs off to the lender and the consumer as well. And when we talk about whether it's an AOL, whether it's a title waiver or Fannie providing title insurance themselves, it's important to think about, you can get lost in the what does this whole process really do? But the reality is the big difference here is that area that's in the red box. The big thing that these companies claim they do differently than what you all do on a day-to-day basis is producing a different form of title commitment, a different form of title policy. They claim that they're doing the same title search that you all, right? They claim that they're going to provide the same closing services as you all. We can get into whether or not that's true in all of that aspect of it. But what they're really claiming is that they found a way to build a different mousetrap when it comes to what that title report looks like and what that title policy looks like. And the reality is, as we get into it, the only way for that to be true is if they're cutting a corner somewhere in the process that is maybe not going to be great for the consumer or potentially even in violation of state law. So we can go to the next slide. Let's talk a little bit about, before we talk about, what these products are doing, let's talk a little bit about what you all do every day, day in and day out. This slide just kind of reminds us, when we're talking about these alternative products, the primary rationale for consideration, every reason that Fannie and Freddie are even considering any of these is the belief that somehow it's going to reduce the cost of for the consumer, right? And so let's put that cost into context. The average homeowner in 2021 paid $1,900 for title and settlement all in. That's Fannie Mae data. It's not our data. It's their own data. Comes out to be 0.67% of the purchase price of a home. So 2/3 of 1% of the home to make sure that you actually own it, make sure that it's yours, that you have all these rights to be able to use it, to actually live there with your family and make memories that you want to make. When we start to consider that against all the other costs of homeownership, I think most of us would say 2/3 of 1% is probably a pretty good deal for all of that. Probably the best deal you're going to get in a real estate transaction. But more importantly, it's also one of the cheapest amounts of money that the consumer is going to spend. And so as we think about the goal of Fannie and Freddie trying to think through where can they put pressure on, where can they find ways to reduce cost, it's going to be difficult to think about where's there actually going to be cost reductions in that 2/3 of 1% of the purchase price. We can go to the next slide. We'll put that into more context. This slide is thanks to our friends at First American, who kind of, again, looking at that same data from Fannie Mae, started to map out, if you looked at the total cost of closing costs across the life that you might own that home or that loan, where does title and settlement rank in terms of the most or least expensive? And hopefully you can see the colors on the graphic here, but those two blue lines at the bottom are title and settlement. So basically 2 of the 3 cheapest things that a homeowner is going to pay in the course of their ownership of a home is to make sure that they actually will own it and make sure that it gets closed equitably, honestly, and fairly. 2 of the more expensive things when you think about what it costs to buy a home as a buyer, government taxes, recording fees, and all of that type of stuff. It's going to be pretty hard for Fannie to make an impact on reducing that cost. Number 2 there is fees paid to the people who buy mortgage securities. Now, some of you might be thinking and asking, hey, that looks like a pretty easy thing, right? The fees you're paying to security holders, that's kind of Fannie and Freddie. That's what they do. Aren't they supposed to be reducing the cost of borrowing in the secondary market for the benefit of homeowners? Isn't that where maybe they could put their biggest effort into finding ways to reduce costs for home buyers? That's a fair question. The third one here is the actual origination charges that the lender charges. So the compensation that the lender takes, 4.4% of the average home price. You add that on to the real estate agent fees. You can see here in the 5th, it's the GSE's own fees. So the amounts the GSE actually charges to do all of this. So, Fannie and Freddie's cost is basically 2.4%, or if my math is going to do me somewhat right, 3 to 4 times the amount of the average title and settlement cost across the country. So, there are plenty of places that they could look at in terms of reducing their own fees. The important thing to also take out of this, though, is that there is efforts at Fannie to try to find ways to put pressure on each one of these line items. So it's not that we're just in this alone, but it's just difficult for us to think about where are they going to find the savings when we are already at such a low end of the cost spectrum. So if we move to the next slide, let's think about that another way, which is let's talk about how, the cost of actually producing a title policy. Because if Fannie and Freddie are looking to find ways to improve the process, to reduce costs, when you look at kind of where your average dollar, your consumer's dollar goes in terms of your costs and producing a policy, the answer is going to be that it's really hard to find those cost savings, right? 52 cents of every dollar that a consumer spends on title and settlement is going to pay your employees to do the actual work, a search, exam, the policy production. So, more than half of it is a pretty heavy fixed cost that you're not going to be able to move too much of in the average policy. 17 cents is buying title data and the technology that it takes to produce policies. 13 cents office space, 4 cents tax, compliance is 3 cents. Really, if you can see here at the bottom, 8 cents of profit is the average profit per dollar of a title policy. 8 cents is pretty low on the standard scale of a profit margin for most industries. So when we think about, again, where are we going to be able to find a way and help Fannie find ways to compress that dollar, it's going to be really hard to do it. But more importantly, if these title alternatives, which claim to do everything the exact same that you do, except with a different policy and a different title report, claim that they can reduce the cost, the question is going to be, if they've got a similar cost structure as this, how are they going to be able to do it? The only way they're going to be able to make that true is if they're reducing things like not paying claims, so therefore they don't have losses, or they're not paying taxes to the state insurance departments. Wonder why they think of themselves as not regulated by the state insurance departments, right? If they're not paying the same compliance costs. So those are where those savings are going to have to come from if they're going to make good on these prices. We can go to the next slide. Now, one of the most difficult parts of this conversation with the industry is trying to think through, again, there's so much that we don't know about how these products work, because in the marketplace, there are very few of them that have actually been sold. At the end of last year, Fannie Mae reported that they had only purchased 45 loans with attorney opinion letters. That's on top of essentially buying 1.2 million loans last year. So they have not bought very many of them, and so there's very little experience that we know that you have and that they have. But we know that that experience is growing. That especially with United Wholesale Mortgage offering their version of this product, there's a greater push in the marketplace for these products. So starting to think through now, what are you going to do as a title company if you come in contact with a transaction that's trying to use an attorney opinion letter, right? All of these loans are going to need to get closed. Oftentimes they're coming to you all as local title companies to get them closed. How are you going to interact with that transaction? Are you willing to do that closing or not? Is your insurer going to let you do that closing? Because you might be in a state like Florida or Utah that has vicarious liability requirements for a title insurer, so that if you handle a closing as a licensed title agent of the insurer, you might be putting that insurer on the hook even if they're not issuing a title insurance policy. You have to look at your requirements under your license, whether or not you can even do all of this. But more importantly, is this the right deal for your customer? And should you be participating in a transaction where you don't believe the customer is getting the protection that they need? If you're a licensed attorney, you have to look at your bar ethics guidelines, whether or not you even have an ethical obligation to make sure that you at least discuss title insurance with the customer before pushing them into one of these types of things. But I think that again, the main way that you're going to come across one of these is a longtime customer of yours. Maybe a real estate mortgage broker is going to come to you and say, "Hey, I write a lot of business on United Wholesale Mortgage. I've got a customer. We're going to be trying out one of these what they call track title review and closing loans. I want you to close it because you've always done a great job closing loans for my customers in the past. I think you would do a great job here." And now you're going to have to ask yourself that question. This is a source of business that's worked with you for a long time, that you've gotten, have a good relationship with. Are you going to be willing to give that transaction a try? If so, how much are you going to charge for it? If so, how much are you going to rely on the AOL to make sure that you're meeting your obligations under any closing instructions? All of those questions are going to be the things that you have to think about before you hop in and say yes or no to that transaction. And then if you do it, are you going to do a second one? Are you going to do a third one once you've gotten one of those in? So thinking through that, while we can talk about these as alternatives, they might not ever impact your business because you're not, by definition, they're not using a standard title insurance policy. It is important for you to think about what would you do if one of these transactions comes to you on the closing side? What would you tell your escrow staff on whether or not they should accept an order like that? What processes would you have in place to do these transactions if you want to, especially given who is in the market offering these? I see we have a question that came in on my last slide on the cost breakdown, asking about whether or not that was just for producing a title policy or if it also included the cost of escrow and closing. The answer is it's everything. So that is, if you think of every dollar paid to a title company, that's the basic breakout of where those expenses come from, whether both policy and escrow and closing. And I should remember, if you do have a question, please make sure you submit it in the chat box. We'll try to get to as many of them as we can in presentation and then at the end as well. So if we can move to the next slide. So now that we've kind of talked a little bit about our product and kind of how they might, and then how these unregulated alternatives come in front of you, I think now it's important for us to kind of really dive into what are these unregulated alternatives? How do they purport to work? But more importantly, what are some of the limitations or questions that we think consumers should be asking, regulators should be asking if they're facing one of these products? As Chris alluded to at the beginning of the presentation, there's really two providers in the market offering the quote attorney opinion letter products. These are the Voxer and United Wholesale Mortgage. And while there's a lot that we don't know about these products, because again, they purport to be unregulated, so they don't submit information to the NAIC or to a state insurance department like you all do. They don't have those same licensing requirements, or at least they're trying to avoid those same licensing requirements. We have learned a lot about what these products are, so we'll try to kind of weave them in. Here on the screen, you have a series of questions that regulators have been asking about these products over the last year as they've become more aware of them in the marketplaces. First and foremost is always going to be that question about marketing. Why is marketing so important? Because, if you think about the idea here, these alternatives are only being considered supposedly by Fannie because they have the potential to lower costs. But we know that in a lot of markets, that's not going to be true. And so the question is going to be, how do they get marketed to consumers? Do consumers actually get to be aware of the fact that an AOL might actually be more expensive than title insurance in many instances? Again, think about your seller pay states: Texas, Arizona, California, most of California. In those states, you have a scenario where the seller is going to buy the owner's title insurance policy as part of that real estate purchase and sale contract. If the buyer is going to pay anything, it's going to be a nominal. In Texas, what's I think like $100-$150. In Arizona, it's like $100. They're going to pay a nominal fee for the lender's policy. How's that ever going to be less or more expensive than what you'd pay to also buy an AOL on top of that owner's policy? You'd by necessity, you'd be doing duplicate work and duplicate pricing. So the question of how these products get marketed, especially in those areas where seller pay is the common practice, really is important for regulators, but it's also important, I think, for a consumer. Right? If you're in those states and you see a customer coming to you with an AOL as the starting point of that transaction, what question should or should you not ask of your customer? Are you aware that you could get more coverage for less price if you went with a regular title insurance policy? We talked about in the slide earlier that that these companies purport that the only thing different about their product is the type of insurance policy that's offered, that they do everything else the same, the title search, the curative. But the reality is that's an unknown question, right? If only 45 of these have been done in the last year, how do we really know whether or not a good search is getting done? There's any curative work, all those things that consumers really do care about, because, newsflash to hopefully nobody on this call, most consumers don't just want you to do no search. They don't want you just to say, hey, don't worry, you have insurance on the back end when somebody tries to kick you out of your house. They'd like you to make sure that you actually have prevented that from happening in the first place, right? That's what they think they're paying for, and that's what they want. And so understanding how the search works in these products, the curative works in these products, is really critical, not just for policymakers and regulators as we learn, but for most consumers as well. And so understanding those questions and how they might be coming up is also critical. You've got a host of other questions here, but the important thing I want you to take away from this is, the way these products are marketed is they're the exact same as title, except we just do a different insurance policy. And for those of you that are in the markets that are facing some of these questions and seeing consumers come to you with these topics, I think it's important for you to think about how are you going to reach out to that customer that's come to you, that's asking you to do a closing, to make sure that they understand that they could have had a better choice, that they should have had a better option, and make sure that they truly, honestly have decided that they want to go with one of these alternatives, as opposed to a licensed and regulated title insurance product. And that's even before we get into the question of whether or not they should be allowed to offer it and whether or not state regulation allows it. But from a consumer standpoint, it's making sure that they understand that they might have had a better choice if they had just been informed about it. So if we can move to the next slide. So now we're going to, most of what we've talked a little bit about now has been focused on these unregulated alternatives that are we commonly call the attorney opinion letter products. We're now flip it over to Chris to talk about another one of these unregulated alternatives, the so-called title insurance waiver pilot, or the effort by Fannie to essentially become its own swarm of title insurer. So Chris, why don't you take it from here and tell us, what's happening with that proposal?
Great, thanks, Steve. And I think this is where, as Steve said, the attorney opinion letter debate is a very strong and vocal one from the perspective of our industry weighing in. As Steve said, we've talked with not only federal policymakers, but state insurance regulators. They're aware of these and asking that set of questions that Steve posed. I think this development, as I said, in February of 2023, was really for, I think, almost all folks we've talked to, a real step too far on a number of fronts. So as I mentioned, Fannie Mae is purporting to waive title on a certain loans that it purchases on the lender side, and essentially take on that risk and become de facto an insurance provider in exchange for a fee from the lender, and moving forward in that regard. I think the questions that are of real concern, particularly to policymakers, is, you know, the one of authority, mission, and charter. And this is really from all of the indications that we've heard from policymakers and the concerns that we have as well, a step beyond the charter for which the GSEs were established. They're a secondary market actor. They should not be in the business of providing primary market products. That's not within their purview. And we've seen this sort of play before. Fannie Mae in the past has moved to try to move into markets like mortgage insurance. They've attempted in the past to look at the life insurance space. And so, you know, on that front, historically, it's not new for them to sort of move their mission and sort of see that mission creep evolving, I think, but that's what's resonating with policymakers. So that's a set of concerns. I think the other piece here from a structure perspective and a concern from policymakers and regulators is really about risk. You know, we've just come through a period where we've seen failure of some financial institutions around the country, which has, you know, obviously engaged policymakers to ask critical questions about the structure around the financial system, as they should and, you know, continue to do. I think we're clearly in a market from a housing perspective where rates are significantly up from where they've been. I know that has unfortunately diminished a lot of the, you know, the activity for all of those listening to this call in our industry. But I think it's an appropriate question, and one that's we're asking and others are asking, is this the time for us to be having the GSEs and the housing finance system put under stress by taking on new risks in an environment where rates are going up, where exposure is increasing from that perspective, where they're moving into places where they don't have expertise and they're not appropriately regulated or established for such. And so that risk component is really an important one that we're very concerned about. And I think the final thing is really about what is right and best for both lenders, consumers, and the overall marketplace. And again, you know, we come back to the experience and expertise, proven track record, and robust regulation that we have in our industry, and the fact that we are innovating. We're innovating in a lot of different ways. We've seen that with the digital space, digital closings. We're doing that with product design and all of those things, and I think we're going to continue to do that. And so what we've said to the FHFA, what we've said to the GSEs directly is, rather than go this route, rather than move away from that proven and established and well-regulated circumstance and product and industry, let's collaborate. And so we're trying to have that conversation at the same time. We're pointing out the flaws and risks with this particular waiver pilot. From a process perspective, I will say this pilot has not formally been submitted through the Federal Housing Finance Agency, and so they have not reviewed and or approved that activity, although we are aware that there are discussions in the marketplace from a lender perspective about this. But what we've said to the FHFA and what we've said to policymakers is, at a minimum, there needs to be a public process should this move forward. There needs to be an opportunity to comment. There was a rule that was passed recently by the FHFA, the new products and activities rule, that would require a review process at FHFA. We need and believe that that should be a public process. And so there are checks and balances that should be in the system, even though we also would believe that strongly that this is not an idea that is worthy ultimately of approval, given all of the flaws that we understand and believe to be in the structure of this. There's more that we can and are trying to understand about it, but as it relates to the basics of the program, that's where we are at this point. So I don't know, Steve, if you have anything to add to that before we turn to Emily. But if not, I know Emily wants to talk a little bit more about the work we're doing in leading the effort from an advocacy and education perspective.
No, I think, last thing I'll say here before we kind of get into the advocacy part of this is, again, much of what we, much of these ideas in this pilot are things that we don't know. And part of that is, as Chris said, it hasn't been proposed to FHFA yet. So there's no solid, documents out there saying this is how this whole thing would work and all of these types of things. But, we do take the topic very seriously, and we are trying to figure out as much as we can because, in our mind, and what we continue to hear from others, especially in DC, is the notion of going without a title product, without a title search, without title insurance is going to be a hard pill to swallow for a lot of policymakers. And so the more that we can hear about what these rumors are, the more that we can kind of get honest information to bring into policymakers, the more we're able to kind of get a good conversation going about what should and should not be the right thing for American homeowners, especially as we look at, back to the kind of where Chris started this with the background, this massive home ownership gap between minority home buyers and white home buyers is going to continue to be a major focus of not just this administration, but future administrations when it comes to the appropriate part of housing policy. And it needs to be something that we focus on, for all of you, because the reality is our country is getting less and less white over time. And the more we're able to find and meet the needs of minority home buyers, it's only going to help our marketplace in general. And so if these are the ideas that are coming forward to Fannie right now, we need to also figure out why are they attractive and how do we come up with better ideas so that they don't think about something as dumb as this in the future. So with that, let's turn over to Emily to talk more about what's going on from our policymaker conversations.
Thank you, Steve. First of all, I would personally, on behalf of our whole team, really just like to thank all of you. The effort that we have put forth together as an industry has been really remarkable and it is not going to noticed. Around Advocacy Summit, I think we had nearly 200 meetings. We had a really great group of people here in town. Having all those meetings on Capitol Hill really helped us grow the momentum leading up into the financial services hearings later that month. Maybe next slide. During those hearings, we had multiple members talk about our issue. The hearing wasn't directly on title insurance, but by the time it was over, people thought it was. I think that Congressman Garbarino really summed it up in his quote here. Any sort of waiver of title insurance requirements by the GSEs would be a huge mistake. The fact that we have all these members out there that are on our side, they're willing to say these things, put these things in the record, questioning Sandra Thompson, these are really huge efforts. And a lot of that is much thanks to all of you for coming, for meeting with your members of Congress and really continuing this effort. And like I said, he was not alone. We had multiple members on both sides of the aisle voice concerns about these issues. And we continue to use those quotes, those comments, that momentum is really pushing us forward. But we haven't stopped since then. And you all have continued to kind of push your way through this effort with us, which we really appreciate. The TAN effort, the TAN alert effort that has been going on has been incredible. We've had lots and lots of folks reaching out, expressing concerns about these products, and to your members of Congress, it really, really helps us to have that local effort. There are, if you have not had an opportunity to do the TAN alert and to reach out, there is still time to do that, but there are also going to be many more opportunities in the near future. We have a lot of really exciting things coming up. We have some potential legislation, lots of letters, lots of different exciting state-based issues and letters and ideas that are coming up. So we really have a lot kind of rolling out in the next days, weeks, months, and we're really excited about that. And your help in really getting us all together to move forward on this is going to be really, really helpful. In addition, we're moving into that time of year where members spend a period of time at home, or as we like to call it here in Washington, D.C., congressional recess or August recess. but please, let's not let that time go to waste. Your members are going to be home. They're going to be available, whether you invite them to your office or whether you see them at a county fair. Go up and talk to them. Tell them who you are, who you represent, what you do, why what you do is important, and use all of those opportunities, because I think that's going to become more and more important as we move forward. If you have any questions about any of that, let us know. Leah Shimpaz, myself, Steve, Chris, Kevin, reach out to any of us. We are more than happy to help you kind of figure out how to move forward or how to make all of that stuff work. But we have a lot of strong momentum behind us. And like I said in the beginning, the effort that we have put forth over the last handful of months specifically has really been remarkable, and it's a joint effort. So thank you all very, very much for that. I don't know if we have any specific questions on advocacy related stuff or other questions, but I open it up for that.
Well, why don't we, before we kind of get to questions, as people start to formulate them and throw them in the chat function, why don't we have Jeremy play the video here?
There's a reason private lenders require title insurance. When homeowners purchase their homes, that's usually the biggest asset they're going to buy.
There are some major concerns amongst my colleagues, whether it's the reported Fannie Mae title waiver pilot or the promotion of unregulated title insurance alternatives onto the low-income borrowers. I too am worried that the FHFA may be pushing alternative products and workarounds that don't effectively protect home buyers, lenders, or GSEs themselves.
I did house closings all the time. I worked with title insurance companies. Thank God for them, because they saved a lot of homeowners a lot of grief by going through the title insurance policy. So I don't think it would be a sound proposal, and I hope if anything does come forward where Fannie and Freddie would waive those insurance requirements, I would hope you would object to it. It's one thing to have title insurance that protects the lender. It's also another thing to have title insurance that protects the homeowner. So I think any sort of waiver of title insurance requirements by the GSEs would be a huge mistake and would end up hurting consumers.
My wife's an attorney and she handles real estate closings, so I certainly understand the importance of title insurance and the protection it provides to home buyers and lenders. I want to touch on this proposed pilot from Fannie Mae to become a de facto title insurance company. That really concerns me, what I've heard reported on that, as consumers could lose critical protections for their homes. Do you agree that protecting consumers and their homes should be a top priority, and that Fannie Mae, by replacing title insurance, probably is not the best way to do that?
I have some strong concerns about the reported title insurance pilot program at Fannie, namely the opaque process with which this program is being developed and how it would work in practice.
Don't homeowners and the agencies need the protection of title insurance?
So as you can see, a lot of members have been very concerned about the risks associated with these products. So if we think about steps you can take going forward, I know Emily mentioned a lot of these, but anything further you want to talk about from an advocacy perspective, Emily?
No, I think that being able to really hear the members talk, I think is really helpful. But I just want to say thank you.
All right, so why don't we pivot to questions? I know we've got a handful have come in the question box, in the question portal. Again, if you have a question, we'll try to get through it in the last 10 minutes or so that we have here, but do submit them in the chat feature and we'll try to get to them as they come in. So the first question here comes from Linda. Emily, do you have a list of educational resources or other information about these pilots and what we're doing that we can distribute to our customers, our agents, our employees?
We do have a lot of great educational materials, and we will send those along with the this video of this webinar. I appreciate that. I think that'll be helpful.
And if you also look at our advocacy tab on our website under alternative products, there are a number of fact sheets and other information that you can pull from.
All right. Next question comes from Lisa. I'm going to pitch it over to Chris, which is, so what do we think happens if there's, say, a change in administration? You know, there's this big election coming next year. What happens to all of these ideas and ability to curb Fannie Mae if the administration changes in 2024?
Yeah, that's a great question. You know, certainly a lot of the impetus behind this is being driven by, you know, a number of priorities of the current administration. So there's a big impact from that perspective in terms of how the FHFA and other agencies shift in terms of their focus, and inevitably there will be new leadership at those agencies. I will say this, the one thing that it is important to recognize, though, is that when rules or guidance or things get embedded in an agency, it still remains challenging, even with changes in administrations, to sort of roll that back or stop those things. So I think the work we're doing today is pivotal to set us up for whatever may come tomorrow. But there's no question that changes in administration and leadership will certainly have a real impact on the direction of the GSEs and the prioritization of these kinds of plans.
Great. So the next question comes from Michael. He asks, you know, like with the AOLs, is this title waiver pilot something that Fannie and Freddie can do, or FHFA can do, without having to get a congressional approval? The short answer, I'll take that. The short answer is yes. I mean, there's, you know, as with most of these lending programs and most of the work that FHFA does, they don't have to write a specific rule on this. They don't have to get congressional approval to do all of this. Most of this they can do on their own, especially because right now Fannie Mae and Freddie Mac are in conservatorship and are essentially run by the federal government, even though they are quasi-private entities. I think, you know, one of the things that you would hear from Chris and Emily is it is that fact that is somewhat concerning to our partners in Congress and to many of the members of Congress that you heard in that video, that they could do all of this without having to go to congressional approval. And a lot of members of Congress are expressing their concern that there needs to be more openness and transparency to Congress before Fannie and Freddie do anything like this because of the impacts on consumers. We're working on a lot of efforts to hopefully make it harder for Fannie and Freddie to do that in the future. But you know, right now this is something that they can make the choice to do on their own or with FHFA's approval. But we think most members of Congress would have a lot to say if they did that. I don't know, Emily, Chris, do you have any other thoughts on that? Hearing none, let's move on to our next question. So the next question from Shelley is, you know, how do these attorney opinion letters work? How do claims get paid? Who's liable to the buyer or the seller if there's something that gets missed in a title search? Again, I think that the simple way to think about this is the providers that offer these products market them as full coverage title insurance alternatives, right? They claim that they're exactly like title insurance. They cover all the same things. It's just a different form of policy and a different claims process. But they all claim to offer some monetary compensation for those issues. They claim to offer some level of duty to defend, just like title companies offer. I think, you know, as we've looked at some of these products, you know, I think there's a lot of skepticism to those statements, but that's the way they market themselves, and that's what they're trying to sell to consumers. As we've talked with regulators across the country, especially state insurance commissioners, a lot of them have expressed those same questions and concerns. And so you know, our hope is, and our focus is on making sure not just that our regulators understand those differences, but for you all as title professionals, I would encourage you to make sure that your customers understand those differences, right? If you've got a mortgage broker that's coming to you saying, I'm thinking this loan is probably going to get placed at United Wholesale. They're pitching really hard to utilize this other attorney opinion letter product. It is good for you to be, as you know, as a marketer of your own product, to say, have you considered the fact that your customer may not get the same level of protection, that the claims process could be a lot different, that it might not cover all the same things that you want and that your customer wants to have covered. And if you need a kind of good overview of what that means, again, back to the advocacy website that Chris mentioned that has our coverage comparison, a lot of our information about what's different than these products. So thank you, Shelley, for that question. We are kind of closely running out of time, so I'm going to try to run through a couple more of these questions more quickly. Michael asked, what do we think the likely impact of these title waiver pilots are going to be on the sale of title policies? I think, again, look, as Chris kind of outlined, we are somewhat more optimistic that given all of the concerns expressed by members of Congress, that pilot is not going to hopefully get off the ground. But if it does, I think you have to wonder, and the question of, Fannie Mae is a 8,000-pound gorilla in a room, and if they're going to commit to doing a pilot where they become a title insurer themselves, are they going to set that up to fail or set that up to be a very small amount of business? So nobody knows what the actual impact is going to be, but if it is something that goes forward, it's going to, it's by necessity going to be a bigger impact on your business, just given the size and scope of Fannie Mae. Kind of going through, looking at the next question. There's some more questions about the proposed costs of these pilot programs. Again, some of this is up in the air right now. If you do look at the marketing materials from Boxer or from United Wholesale, they will give you some pricing comparisons. I think the most important thing to think about is that's an important conversation for you to have with your customer. If there's somebody that comes up to you and says, I'd like you to do a closing with one of these AOLs, it's important for you to really dive in and think about, are you going to talk to them about the cost and the difference there? Because most of these products claim to be cheaper, but if you start to dig into the actual, additional fees that get charged or the additional structures, it really comes out to probably be the same, if not a little more expensive in many instances than title. And specifically in a seller pay state, if you're in one of the 27 states where it's common for the seller to pay for the owner's title insurance policy for the buyer, it's almost never going to be cheaper. In fact, it's probably only cheaper in one state, if at all. And so those are good questions for you to be asking as you start to see some of these transactions come through to you. We've got another question here about what happens if an attorney that issues an AOL later goes out of business. How does the coverage work? Again, those are good questions to really be thinking about, because those are a lot of the operational questions that a Fannie and Freddie are not really thinking about, right? They're sitting there hearing, hey, this company's come and marketed to me saying they can offer a title product that's the same as title insurance but cheaper. Great, prove it. And so there's a lot of those questions that'll not really get known until you get into the weeds of this. And hopefully, and the reality is, no consumer should have to be the test case for this, right? Consumers should only be sold the products that they know are going to be beneficial to them and that they know are going to be the most cost effective and most comprehensive in their coverage. So I know we're kind of hitting at the end of our time. I'm going to turn it back over to Jeremy. Again, if you asked a question that didn't get answered, please do submit them back to us, and we'll try to get to as many of them as we can later on. But Jeremy, do you want to kind of wrap it up from here?
Yeah, thank you, Steve, and thank you, Emily and Chris. Great information on how we got to where we are today in regard to the waiver pilot and other unregulated title products. If you missed parts of today's webinar, or you think others in your office would benefit from listening, I know I got a few emails asking if there'd be a recording available. Yes, all of our webinars are archived on the ALTA website at alta.org/webinars. And you'll also get an email tomorrow with a link to the recording. We'll also include links to the educational material that was asked. We'll include a link to access the Title Action Network, and that way you can take action there. And we'll also include a link to download a copy of today's presentation. Again, as Steve mentioned, you have any questions that pop up, feel free to reach out to us and we'll do our best to get them answered as soon as we can. Also need to thank Qualia once again for sponsoring today's webinar. And with that, that will bring us to the conclusion of today's presentation. Thank you everyone for joining us, and take care.